GetCrack. Wake up, motherfucker.
The breakdown for the numbers on the retail sales. Motor vehicles down 2.8%, furniture down 1.7%, building materials down 1.3%, and food and beverage stores down 0.1%, groceries up 0.2%. So not much help there, and sometimes we get that. Gasoline stations were up 0.9 on the month. Department stores up by about 0.8%. And non-store retailers, this is where the real weakness appears to be, down 1.9%. Now, the one other caveat is that the retail sales control group for last month was revised up to an 0.8 gain. So over the 2 months, if you average them, we're flat, but they're in 2 separate quarters. So this starts us off on a bad note for the first quarter.
Mike McKee, appreciate it, sir. Thank you. Joining us around the table, Lindsay Piegza of Stifel. A whole bunch of headwinds have held back the consumer sentiment. We've seen that be hit in the last month or so. Is it hurting spending?
Well, clearly, I think this number really starts to poke some of the holes into the thesis that we see this ongoing resilience of the consumer. Now, broadly speaking, we continue to see the consumer spend in the marketplace on goods and services, but it's that loss of momentum. It's that second derivative decline of the consumer slowing the pace of still positive expenditures. Now, Lisa, as you pointed out, a lot of this weakness is offset by earlier upward revisions to prior months. That being said, there are clearly still challenges facing the consumer in this environment of higher prices, higher borrowing costs, the resumption of student debt payments. There's still a lot of challenges facing the average American and the average household balance sheet.
I feel like we're whipsawed in terms of a narrative every day. One day it's weakness that potentially could be the biggest headwind to the market this year. The other, it could be inflationary and an upward growth shock. Which is it?
Well, I think it goes together. I think inflation is one of the biggest challenges that we're seeing weigh on consumers at this point. As consumers are forced to face this burden of elevated prices as they have been for years, that's going to continue to erode their ability to spend in the marketplace. Now, we've seen consumers turn to many of these one-off scenarios, buy now, pay later, turning to credit cards with balances over now $1.2 trillion. But as that burden continues to increase, that's going to ameliorate their ability to find these additional supplements to continue to spend at this pace. So we've gone from double-digit spending down to 8, down to 6. We're now averaging just under 3% since the start of 2023. That's still indicative of a solid 2% GDP pace. But if we slow further from here, that could start to add to the momentum of a stagflation storyline.
I told you yesterday about a push from JP Chase workers to retain and expand the bank's hybrid work model. Some signed a publicly visible petition calling on CEO Jamie Dimon to reverse the decision to bring employees back to the office 5 days a week starting next month. Well, if you know Jamie Dimon, if you followed him at all, you might have anticipated his response, which he did give at an animated town hall meeting yesterday, according to a recording that was reviewed by Reuters. When he was asked about that petition, he responded, "Don't waste time on it. I don't care how many people sign that effing petition." Except I don't think he said effing. Instead, Dimon stressed that employees have a choice whether to work at JP Morgan or not. Dimon said some staff didn't pay attention during Zoom meetings, which reduced their efficiency and their creativity. He said there is, in his words, zero chance that he will leave in-office requirements up to the managers because he said the abuse that took place is extraordinary. He asked departments for more efficiency, including 10% cuts in reports, meetings, documents, and training sessions. We'd all appreciate that around here.
The lifeblood of middle management. And they want to cut those things.
I'm still overdue for training sessions I was supposed to do last year.
Cut them more than 10%.
I think we all anticipated yesterday when we first heard about this petition that might be Jamie's response to it.
Yeah.
Sure enough, he didn't disappoint.
Dimon doubling down on JP Morgan's 5-day return to office mandate during a town hall meeting yesterday. According to Reuters, Dimon pushed back on some employee complaints as one group even launched an online petition for Dimon to soften the policy. Dimon said, quote, "Don't waste time on it. I don't care how many people sign that blank petition. There is no chance that I will leave it up to managers. The abuse that took place is extraordinary." We've been talking about financial services in general pushing for return to office, but Diamond seems to be doing a little bit more, too.
Was very early in it, first of all. And I think there are many reasons for that, why the big banks in particular feel like it's necessary. I mean, it's a compliance-heavy workplace. Half the year is spent figuring out who's supposed to get credit and compensation for what they did. And so it's not as easy to just sort of do that when everyone's at home. Plus, they're big organizations, and it acts as a bit of a culling process, probably.
And the onboarding for new employees, especially, right?
It's not just financial services. Now,
it's not everything.
You will not find a CEO, at least off the record, who speaks to us, who wants their employees working from home. And I do think there's a bit of a shift on this that comes from the White House. I mean, one of the president's first executive orders before he was even in office for a full day was demanding that federal workers work 5 days a week from the office. I think it feeds into the whole buyouts. You know, if they don't want to work in the office, then they should take the buyouts and not work. And then I found this 2024 report from the OMB, which is showing that the Department of Education, as of 2024, half of the staff work remotely. About 55% of the staff work remotely. Small Business Administration, 48.5% of the staff work from home. Office of Personnel Management, also half of the staff are remote workers. So this is going to be...
Well, maybe that'll help DOGE sell the 500 government-owned buildings that they're supposedly looking to put on the market right away
if those
from
people
the
leave.
GSA. Yeah, I mean, obviously, you know, it's who has the power, labor or the employers? I mean, that's
we knew that this pendulum would swing, and we knew that it was being folded into comp at one point, your ability to work from home, and now it's just completely gone the other way.
Press conference inside the Oval Office on Tuesday with President Trump. Elon Musk defended Doge.
What meaning does democracy actually have? If the people cannot vote and have their will be decided by their elected representatives in the form of the president and the Senate and the House, then we don't live in a democracy. We live in a bureaucracy. So it's incredibly important that we close that feedback loop, we fix that feedback loop, and that the public's elected representatives, the president, the House, and the Senate, decide what happens, as opposed to a large, unelected bureaucracy.
Joining us right now is Joe Lonsdale, 8VC founding partner, co-founder of Palantir. There's about 100 things that we want to talk about, Joe, including Doge, including OpenAI, and yes, carried interest, given our conversation on X over the weekend about that. But let me start on the OpenAI Musk front, if you will, because I know that you're a backer of his proposal, or maybe we should call it a hostile bid for OpenAI, which is a not-for-profit. Tell us how it came about. What's your involvement in it? I think we're all trying to understand what's really going on there.
Good morning, Andrew. Well, listen, it's been a really fun 20 days, right? I think this administration, with Elon's help and with President Trump in charge, is winning more than we've ever seen before in 30 years. We've done what we haven't, we couldn't do this much in the last few generations. And for me, I just think this is such a cool time for our civilization. I'm really bullish on what Elon's doing. And listen, I know both Elon and Sam, and Elon really helped create OpenAI. What Sam's done with it's amazing. If Elon wants to do something, I'm gonna support him, though.
Just from a legal perspective, I spent the past 48 hours trying to look through what's happening here. It feels like, just so we're on the same page, that the bid itself, dead on arrival insofar as the board of OpenAI, which is a not-for-profit, given its current structure at least, has actually zero obligation, fiduciary duty, if you will, to return to the investors who've invested in the subsidiary. So just because there's a bid doesn't mean that it has to be taken or even taken seriously, because the only thing that the only duty they have is to the, quote, mission of the not-for-profit charter, which then raises all sorts of questions about, what the bid is really all about. A lot of speculation that really what it is an effort to try to create a floor or a valuation metric, which would make it tougher, frankly, for OpenAI to become a for-profit, because some of the AGs could get involved and start to look at, what's called fair value, and they might look at the bid as a potential metric to sort of set against. Do you feel like, can you just speak to what's happening here? Because I think everybody who's looking at it just on its face says it can't really be what it is.
Well, listen, this is obviously a sensitive legal situation, Andrew, and I'm not the spokesperson for what's going on, so I want to be really careful what I say. What I will tell you is that, You know, Elon really helped create OpenAI, helped create the mission at the very beginning. Probably wouldn't exist without him. And you know, I think the mission was it's supposed to be open, and it's not, but yet it has done amazing things for the world. And listen, if Elon were to be able to buy it, I think it'd be a great thing for the world. Some people disagree, but he's making a serious bid. And when my friend, who I think is, you know, right now the most important person in the world, wants to do something, we gotta support him.
Let's talk about Doge. I think there's a lot of people that are super excited about trying to get to the bottom of and find all sorts of things in the government that maybe we shouldn't be spending our money on. That's the one side of it. And then obviously you've seen some of the Treasury secretaries and others, you know, write public letters in the New York Times and elsewhere, frustrated and concerned about what they would say is the transparency of the process, not about the good news of the transparency of what we may learn, but how this is all being done. What do you think about that?
Well, I mean, what I think is that, like I said, in 20 days, we've done what we couldn't do in multiple generations. We have this permanent bureaucracy, Andrew, and it's just shocking what they're uncovering. Like, I knew there was waste. I'm one of the only guys who've been speaking out very boldly the last 10 years about how badly this needs to be cut, how badly we need to get into these things. There's even more waste than even I thought, and I was probably on the most extreme side of people saying this is ridiculous and broken, right? So, I mean, it's just amazing what they're uncovering everywhere they go here. I think they are being quite transparent about the things they're finding. I think a lot more will continue to come out. But I mean, what we know is not being transparent is the mainstream media right now is not being transparent about how ludicrous these things are that they're finding, because it's afraid to offend its readers and its listeners on the left overall. I mean, we're living in different realities in our country right now because one side's reporting, you know, hundreds of crazy things. There's all these scams around the world. There's all this money clearly being wasted. There's all this grift being stolen. There's money going to, frankly, to media as well, as you've seen, which is really crazy. And the other side's just not even reporting on the things that are being found. So, you know, in general, I think this is amazing what they're doing. I think they should keep doing it really boldly. The executive order yesterday, 4 employees out for every employee in, they're going to make it more efficient. It's very clear these employees are not working efficiently. I mean, this is awesome stuff. And what's happening, you know, Elon made a great point. I was involved as a kid at PayPal a little bit. Whenever you'd turn off fraud or grift, or change something, the people who would scream the most were the fraudsters, and so the noise is mostly right now coming from.
Can I think I'm gonna. I hope you will think I'm coming to this from a place. I know you're gonna say mainstream media, but I hope you'll. I think that a lot of the grift, terrible. I'm very supportive of the idea of trying to expose all of the grift. I think we've been reporting on it quite regularly, actually. I think that the question. And I think we should continue to support trying to find as much grift as possible. At the same time, I would think for the purposes of exposing that grift and making it all work as a country, you want the process to be as credible as possible. So to the extent that there are people who say to themselves, not about whether they're worried about what the fraud is or not, but to say, you know, are these things going, is this data being used in some way we don't know? Is it going into an AI system that we don't know about? Are the people who are finding the grift government employees? Have they been vetted? I mean, isn't it best? Couldn't you walk and chew gum at the same time? Meaning, get all of the grift, expose all of it in the best way possible, and have the process be so credible that everybody says, "Oh my goodness."
Never. You could never have everyone say that.
Well, that's what I'm asking Joe.
Joe's right. They're going to be angry. But listen, Andrew, I mean, what we had to do here is that there's been layers of bureaucracy. Like, I have mentors in the Reagan administration who came in looking for these things, and those people were not technical. And so when they went to the bureaucracy and they asked questions, there's so many ways of obscuring and blocking and deterring. And so what Elon did is he got root access, and he went to tech systems themselves. No one has done this ever. Like, no president ever has had tech people around him, and they went to the systems and they started finding things like, oh my goodness. And these people who work for the agencies try to confront them and say, no, you can't look at the systems. You're getting around all of our ability to block all this stuff. We thought you'd never actually get to see any of this. And they're freaking out because they're looking. And so it's very transparent. They went to the systems, they actually saw the payments, and the payments were going out to crazy shit. There were payments to people with same social security numbers. There are payments to people with no social security numbers to 100 billion. There's it's everywhere. There's payments to Internews Network, which is training media all around the world how to have a certain point of view that's a very left point of view. There are payments to protesters around the world. There's like all this stuff that's crazy, and they're being very transparent. Yes, we went to the data, we found it, It's only been 20 days. Like, give them a chance. They're gonna put all of this out. They already are putting a lot out. I mean, I think this is amazing, but people want to slow them down. They want to slow them down from stopping their grift is really the biggest question here.
Alrighty. Valentine's Day. What's up, guys? What's up, guys? Okay, so the grift. Let's see what grift I'm doing here. Did I do a grift? I don't think I'm doing a grift. I don't think I'm doing grift, am I? So let's look at what SMCI did today. Up 13%. Let's look at RXRX. Up 23%. A lot of stuff I was talking about yesterday night seemed to have did well. So again, I think it's been a pretty good 2 weeks. MindMed MNMDs was up like 20% at one point. So that's nice. ATAI, yeah, pretty good. It was kind of going 6%. So pretty good, pretty good, pretty good, pretty good. I think we're doing very well. Oh yeah, and China, for not to mention China, KC was up 20 something percent. Yeah. So I sold some chunk of it today, KC, Kingsoft Cloud. And let's see how it goes. I think we're pretty much at the top for China. All right. So I don't know if anybody really wants to risk too much going into the weekend, but I think we're pretty done here. We've recovered everything that was lost in October. Okay, so we're back at the starting point. I would say, yeah, wait for a pullback there. For the QQQ made a new high. So if you can see here, yeah, this 22,500 level on the Hang Seng index. So yeah, I think we got it. I don't know. Yeah, I don't think we can go up next week. Next week we'll have earnings. You'll have JD, you'll have Baba, I think, reporting. JD will report. Let's see. JD should report around Thursday. Oh, no, that's 2 weeks. Never mind. I guess JD's not doing it first, huh? I guess Baba's first. Okay, Thursday, next week on the 20th. Okay, so we got to see how that goes. 20% total on Baba, so not bad for anybody that's been doing that. We're at like near an area here of resistance for Baba, so let's see around this red candle here. So in this range between $100 and $133, I think this area is going to be someplace that's going to fight in. So yeah, don't expect too much here. We've already gone quite a lot into earnings. So I wouldn't say it's going to be easy, all right, at this point. So any of you guys in Baba, that should be it. Let's see what Mexico's doing. Mexico, not bad. So if you're in EWW, it's near its resistance here at 53. Should go to 54. Maybe have some trouble to get to 57. But it should eventually get there. I think after today, you saw dollars down, interest rates down. So that weak retail report pretty much helps. Mexico, yeah. So if you did MEXX2X leverage, so from here to here, $33% already, not bad. All right, let's see how much more we can go. Okay, so that's good. Small caps didn't break out of this area. We're still stuck in the box. So this box at 211 to 230, we need to get up back to 240 for me to believe anything next week. Not sure if it's going to do that. XBI still weak, not doing well. So biotech there, but ARCG has done pretty good this week. So up 9%. So ARCG, at least the genomic side, is doing good. So that's the ETF for the genomic, like gene testing, gene manipulation, CRISPR stuff. So one stock I've been telling you about is DNA, up 8 something percent, was up 9% today. So that's something that I expect to break out. So that's another one I mentioned this week. Okay, so we got that one, DNA. Let me see how it goes. If it can get back above 17 and break out here. Okay, I saw wheat. So wheat has done well this week, 3.5%. See how corn's doing. Corn's still okay, 1.7%. Soybean, no, not so well. So You can use the ETF if you're not using futures, WEAT. So remember that there's no H in there. It's purposely misspelled. That's the ETF for wheat, corn, spelled the same way. And soybean is just soy B. Okay, there you go. Get all those three for the grains. We'll see how that goes. Okay, gold miners, palladium, platinum, all that stuff has pulled back today. So nothing good today for those in those sectors. But otherwise, yeah, pay attention to the stocks I mentioned last night. So go review that video. Okay. All right. So very good. Very good. Let's see. Let me share this. See what other articles I got to go over. So, I wasn't going to really do anything today, but since we had such an interesting day, I might as well show you. So, let's look at the retail sales. Retail sales in the US contracted 0.9% month over month in January 2025, much worse than forecasts of a 0.1% drop. So, again, like I said, bad news is good news. You want to have basically weak, soft numbers now. Now, this could just be weak sales overall, or it could be the prices are going down. They don't normalize it to inflation when they give out these numbers. Okay, so and we had an upwardly revised 0.7% gain in December, so they improved the numbers for December. It is the biggest decline in retail sales since March of 2023, with severe weather and LA fires weighing on consumer spending. Sales of sporting goods, hobby, musical instruments, and bookstores down negative 4.6%. So that's the biggest decline. Then motor vehicles and parts down 2.8%. Non-store retailers down 1.9%. Furniture down 1.7%. Building material and gardening equipment down 1.3%. Clothing down 1.2%. Health and personal care down 0.3%, and food and beverages down 0.1%. In contrast, sales rose for gasoline, probably because gas prices are rising now, food, services, and drinking places 0.9%, general merchandise stores 0.5%, and miscellaneous store retailers 0.2%. Meanwhile, sales excluding food services, auto dealers, building material stores, and gasoline stations, which are used to calculate the GDP, up. So that's what the first video I played was talking about, decreased 0.8%. So she was telling that economist over there, Piazza, she was like, ooh, that's not good. That's not good. Maybe we're going into stagflation. Okay. And as I said, retail sales data is not adjusted for inflation. So this number could just be like prices are going down, but I guess not. Based on these statistics, I'm guessing not everything on this list has went down in price. It was probably because weak sales. Now, the other side, we look at China. Loans did quite well. So Chinese banks extended a record level of 5,000, so 5 trillion yuan, okay, in January 2025, above the 990 billion yuan in December, and easily beating forecasts of 800 billion yuan. The reading is also higher than the previous record of 4,920 billion, so for about 5 trillion, okay, reached in January 2024, as policy stimulus helped to shore up credit. Also, Chinese lenders tend to front load loans to secure high quality customers and expand their market share at the beginning of the year. Meanwhile, money supply rose 7% year on year, below 7.3% in the previous month, and forecasts of 7.2%. Total social financing, which is a broad measure of credit and liquidity in the economy, has, as it includes off-balance sheet forms of financing such as initial public offerings, loans from trust companies, and bond sales, rose 7 trillion yuan, also a record level compared to 2.8 trillion in December and forecast of 6.4 trillion. Okay, very good, very good. So China's getting stimulated. Expect copper prices to rise. Okay, let's see how that goes. Let's see how the materials go. And I'll read this Reuters, quickly read this Reuters here, and I'll give you a link to that. Yeah, you can read this article on your own. I'll read a little bit of it. Let's see. China, January bank lending hits record high on policy stimulus. February 14th today. That's when it was written. Yeah. So everything I've said here. So M2 supply for January is up 7% year on year versus forecast of 7.2%. Central bank pledges to adjust policy stance to support growth. New bank loans in China surged more than expected to a record high in January as the central bank moved to shore up a patchy economic recovery, reinforcing expectations for more stimulus in coming months as U.S. tariffs threaten to pile more pressure on the economy. Chinese banks extended 5.13 trillion yuan, about $706 billion in new yuan loans in January, more than quadrupling the December figure. Data from the People's Bank of China showed on Monday, beating analyst forecasts. All right. Let's see. While the headline figures for the new local currency loans hit a record high in January, that's only due to the unusual season pattern. Not lending is always the strongest in the start of the year. Bank loan growth continued to slide to record lows, but this was offset by a pickup in non-bank credit growth. Robust government bond issuance should continue supporting credit growth in the coming quarters, but weak private demand will likely keep credit growth subdued. Household loans, including mortgages, rose 443.8 billion yuan in January from 350 billion yuan in December, while corporate loans jumped 4.78 trillion yuan from 490 billion yuan, central bank data showed. New bank lending totaled 18.09 trillion yuan last year, down from a record 22.75 trillion yuan in 2023 and hitting the lowest level since 2019 as businesses and consumers remain cautious about taking on more debt amid an uncertain economic outlook. The economy grew 5% in 2024, meeting the government's official target, but the post-pandemic recovery has been patchy, with exports and manufacturing making up for weak domestic consumption. Beijing is expected to maintain a growth target of around 5% this year, but analysts are uncertain over how quickly policymakers can revive sluggish domestic demand, even as U.S. President Donald Trump punitive trade measures put more pressure on Chinese exporters. To sustain growth and counter rising external pressures, Beijing has pledged higher fiscal spending, increased debt issuance, and further monetary easing. The central bank said on Thursday it would adjust its monetary policy at the appropriate time and use policy tools such as interest rates and bank reserve requirement ratios to support the economy amid rising external headwinds. So this is important. Okay, very important. China's going to keep pumping their economy. So looking at Chinese stocks could be quite well. Okay, you can read the rest of this stuff on your own. All right. Okay, another side note. Oh, Sam Fisher won the quarter final role of he's a quarter finalist, so he's going to get into that bracket. I think voting will continue on February 17th. Okay, 9 a.m. Pacific, noon Eastern. So you guys better do better this time around. The competition is getting tough to get the votes in. All right, so we're down to the last dogs here. Quarterfinalist. All right, very good, very good. Again, let me get the link here. So when you're ready, it's time to donate. You can't donate now. You got to wait until they resume donations. They're gonna do all the people that didn't make it. So the second place people are fighting it out right now. So you got about 2 days, 2 to 3 days here to continue voting. All right. Now let's continue on. Next thing, let's see. NVIDIA. What did NVIDIA do? Okay, NVIDIA reshapes its holdings. Okay. Let me go to this article, I think. So it has new holdings in a startup, a Chinese startup. Okay, WeRide, Nebius, another startup, I guess. Is that a startup? I don't think they have. Do they have a stock ticker? Let me see. Oh, they do. Okay. Let me put that on the list. All right, to look at. Okay, so they're exiting some shares from Serve Robotics, SoundHound, and NanoX. Okay, So there we go. So let's we can look at those. All right. What we got here. So I was talking about sound yesterday, and I was thinking like, the chart looks pretty bad for sound. So this is Nebius. All right, let's put that on the list. Nebius. NBIS. All right. I'll put that in mind. And then Soundhound. So SOUN down 28%. Cut through here. Weekly 18 moving average. That's bad. I'll keep this on the list, on my watch list, because earnings is around the corner. February 27th, last week of February. Maybe there's a tradable moment here, but I'm not sure. Looks like RX is going to do well. BBAI down 7%, so I'm not. Maybe that one's done. Gonna have to look at that one. The other one was Serve, huh? Serve Robotics. Let's see, SRV. Ooh, down 39.57%. Ooh, this is ugly. Looks like maybe Wednesday, 26th of February. Okay, I'll put this one on the list too. And then what's the other one? The other one, Nano X. Okay, maybe Nox. I think that was the ticker right here. Down 10 point. Yeah, this one. This one I was watching from last year. Yeah, I played this one before. Way back when. Probably around when it first came out during the COVID days. Yeah, from November, I guess. Like you could got at $30 and get out at 80. Yeah, this is a nasty little stock. Nasty, nasty, nasty. They just pump and dump, pump and dump. And this thing made a creek here. And I was watching it, see if like it could do it, because it looks like it's not gonna make it. Oh well. I'll put it on the list anyway to watch. Okay. All right. ASTS up 6.8%, so it ended the week okay. 21%. Okay, keep that on mind. Peloton didn't do so well today. It was down like 4% to 5%, but it recovered a little bit and still end the week well at 16. So keeping that on the list. Peloton, PTON. So yeah, there's a lot of charts on here that have good characteristics, I would say. I'm also going to talk about, I forgot to mention yesterday when I was talking about real estate, Fannie Mae and Freddie Mac. Fannie Mae, Freddie Mac, FNMA, FMCC. But I talked about it 2 streams ago this week. And it had earnings today. Okay, so it's up about 5%. Not too much, but it's been up since Donald Trump got elected from $1.30 to $7. And Ackman here, just before New Year's, Ackman was pumping that stock on CNBC, so everyone was rushing into it. So yeah, I'm definitely watching this one. Definitely could be a contender for the next Peloton. I mean, not Peloton, Palantir. Okay, another 1,000 gainer. So I have Fannie Mae, Freddie Mac, FNMA, FMCC, and then you have ATAI, right? So psychedelics, ATAI, MNMD, Mind Medicine, okay, and then TMC. I talked about maybe several streams ago. This is the metals company, and this thing does underwater mining. All right, so I don't have too much on any of these. All right, right now, and I'll show you what I got for because I got out my trading position today. I'm gonna have to see. So this is what I traded today, and I did some SMCI day trade. I think HB was doing RX. Now he's pretty crazy, so I don't know. RX was pretty wild. He just jumped right in. So my trade account today got 7,000. Okay, and I also did MicroStrategies because I saw Bitcoin rising from yesterday, so I was jumping in with that one. So I had a position from that too, And then you had the MindMed and ATAI here. So I don't have too much on that trading account right now. And I'm not sure if I'm going to increase it to next week, if I'm jumping back in these two. But we'll see. We'll see. But this was from last year. So all this stuff was just from the December or November, December area when it was making some lows again. And then so we're gonna see how it goes next week. Okay. And I'll see if there's more, but like everything is gonna be a day trade. Everything, and personally I don't like doing that, but there's no choice right now. As you can tell, like everything, like look at hymns, right? You look at hymns, it's ridiculous. It's ridiculous. You pretty much have to, you kind of have to like watch how things do in a range, because if you look at this, because I got out here. Okay, I got out here last week around Wednesday, right? And then on Friday it did this, so then I started watching it again because my DeMark indicator said 45 was it. That was going to be it. Around 45, 46, that was going to be it. But it started doing this Wednesday, and then on Thursday it popped on huge volume. Okay, first hour when it opened, and I'm like, oh my god, here we go again. So that's why I was talking about it this week. I didn't tell any of you guys saying like, oh, I think this is gonna do this or that, but I kept mentioning it because I saw this characteristic. So if for you guys that do day trading, you could have just jumped in right here, like during this candle, during that first hour, anywhere here, and we just rolled it up. And it's definitely still trying to go up today, but you can see like there's a huge level of volume in the first hour, and it couldn't even get much further. I think, yeah, this is ridiculous. You're just gonna run out of steam eventually here. But RX, however, is a different story. We have a big range. It can go up to 15. Okay. And then once it hits here, I'm very curious because if there's enough liquidity and into March, and then March earnings comes around, I'm not sure if this is going to be when it releases earnings on March 4th, but let's say it has good earnings and the market is doing very well. Like a lot of people are just being greedy. This thing could just suddenly spike out of here, okay, temporarily. So you could find a lot of day trades during that time when it gets past 17. So definitely put RX on your watch list. Yeah, HB. Yeah, I just mentioned it yesterday because I saw the characteristic of this pattern here. So one thing you got to understand is like everything I've taught you so far is Stellantis. Oh, you got Stellantis. Yeah, Dodge merged with them for like 2 billion. Yeah, I heard about Stellantis. I knew a guy who was in that stock. Yeah. Yeah, I remember that one. That was the old times. They had a lot of EVs coming out, stocks coming out. Rivian. I think Rivian still exists, don't they? I see their cars. I'm sure their stock still exists. And so, yes, you see this like pattern here. You see this? Like, I mean, it looks ugly, right? It looks like noise to you, maybe. But to me, it's if you just ignore all these like wild movements, it's just a little smile, right? You see that? So I was talking about it last year, this stock. It's a smile. It's a smile. So eventually, once it's done goofing off between 6 and 7 or 8, I mean, $6 and $8, look at that. So this is the first time, high volume. We pushed out of here. We haven't done this since May 2024. We got this nice smile doing this. I am watching this thing much more carefully next week. All right. So a lot of stuff I've taught you is recognizing setups. This is a setup. Now the problem is like what would be a trigger? Okay, so you have to, when you're doing trading, you look for setups, and then after you see a setup being formed, now you figure out where should I buy. Some people would just buy here when it gets closer to the edge, and then put a stop loss down here and just risk it. Some people like me, I would just rather buy down here Every time it goes up, I'll sell. It comes back down, I'll buy again. Comes back up, I'll sell. I'll come back down, I'll buy again. And then when it makes a more like you see this part here, it's a lot different than this, right? When it moves up and then comes back down, moves up, comes back down. But here, it's not really coming back down sharply anymore. So then it's just making higher lows, higher lows, higher lows. Then you just start going like, this time around, I'm just going to hold more of my shares every time it pops up here, and I'll buy some here expecting something to happen. And today it happened. All right. So now the question is, what should we do now? This is in a no man's land between 8 and 12. It has to get back to 12 eventually. So next week we got to watch it. All right. So look for other stocks like this. And that's why I've said, like, yeah, this is some kind of pattern here. And then DNA is another pattern. Okay. It's doing this. And when you look at the weekly, it's building its energy, climbing into the resistance, the zones here. And if you look at Teladoc, it's kind of a more mature looking version, because here it's kind of cleared all the moving averages. So if I'm looking at the weekly chart here, 40, the 40 is moving down, but now it's curling back up. The 18 is moving up. And if we look here, right, this red bar was significant. Now it's touching, it's testing it. And if you look here, you can say that this area and this area, because this was the next leg down after it hit here. So this zone between 12 and 14, it's going to fight and then eventually break out and go to 20 something. That's my guess. All right. We got earnings coming up of 26th for Teladoc. A lot of these companies have earnings coming up the last week of February. So I'm curious to see what they do. And they have the charts that can probably break out. And that's a lot of volume coming in the past 2 weeks here. So yeah, keep this on the watch list. All right, TDoc, because TDoc is kind of like HIMS. HIMS does telehealth, but then HIMS has the benefit of also doing boner pills and Ozempic generic pills. Yeah, so that's kind of like why. And they had the Super Bowl ad. Probably a lot of the reason why it's doing. And then he had JFK getting confirmed. So I think a lot of these biotech companies, JFK getting confirmed. I mean, not JFK, RFK. My bad. RFK getting confirmed has pushed a lot of these stocks up. Okay, in biotech, but that probably is gonna pull back because that news is over. So now you want to look at somewhere else. So where would the money go? If the money was already flowing into these stocks this week, then we got to look for other things next week, probably. Next week, and next week is also options expiration for the monthly contracts, but it's not going to be major, right? It's not triple witching. I think it'll be hard for the index level to push up. But if you can find some individual stocks that are still pushing up, that's great, because like I said, SMCI, the setup is great. Perfect right here. Very good. This thing is you might as well consider this a base. It's an ugly one. It's damned ugly, but it's about to be completed. So we had the initial move up into December, and then now we're doing a secondary move up. So it's ready to go to 60 for sure. That's the next target for me. 60 something, and then after that it might go to 90 or 100 by May, but that's probably asking a lot. I think it'll depend on Nvidia, what they say, right? So whatever Nvidia says on earnings, if they push it up, that's great, man. This is probably the best trade. I think like last quarter, I probably see, I went from 80,000 to 190, nearly 190. And most of that was because of this stock. Because I switched out SMCI, I went to SMCX. So everything got leveraged up. So I was using this one, this stock here, going from 20 to like 90, going from 30. And I jumped out at like 50, 60 here. And then I started day trading in between. So So anyway, and then the other part of it was like shorting MSTR. Yeah, MSTR. I was using MSTZ to short this thing, MSTZ, and then I started going up and down, shorting it and longing it, and now I don't even know what's going to happen because I think the way I'm seeing the last couple of days with Bitcoin, since it's failed to break down, I have a feeling next week, the next 2 weeks, Bitcoin is going to pop for some reason. If it gets through 108 this time, it's going to try for 120 because it's built up so much energy here. This area has been fought over since December, right? It's already been months here. December, January, about to complete February. We got 3 months of this action. Somebody's doing something. If we assume there are buyers here, then yeah, you got to see MSTR back at the 400s again. Okay. All right. Because the way it's doing this here, it's been attacked so many times. People have been trying to force this thing down. This 95, these two pink lines, 95,600, 96,300. This area is the most important area, and it's been fought over again and again, very violently back in February 3rd. And then again, we got one attempt here last Sunday, February 9th. And then it kept getting attacked again and again. And now we end the week with this. We have high volume this Friday. Someone was pushing it up last minute into the market close. Not sure why, but we'll find out when we have our 3-day weekend, right? So, any thoughts on Tencent? I know about Tencent. I haven't looked at it in a while. Okay, let's see. Tencent. I haven't looked at that one. There's 2 Tencents that you should look at. There's Tencent Media. So this does the music side of Tencent. That stock is okay-ish. Okay. So TME. And then there's the Tencent on the pink sheets, the open over the counter, Tencent. TCEHY. Yeah, I haven't looked at it in a while. Okay, it's back above 60 here. So I drew this line way back when. See, even if I didn't look at this stock, you can tell I drew this line some time ago. So let's see, 2018, right here, that's the resistance. It's around 58. And then down here in October 2018, 33 was a support. You see that? Perfect. So it went over, came back down, went there, bounced off of the support, came back up. It's fighting up again. Yeah, looks like Tencent's ready to go. Tencent should get back up to 100 then. That's where that's chart's saying. That's it. Pretty simple. Not very hard. Not very hard to do this. Yeah, and HB is like says like he's about to get to 6 figures, so that's great. So once he gets into 6 figures, it'll be 6-figure hell for him. So yeah, once you learn how to trade, it's great. You guys need to learn how to trade. That's how you make money. Actually, since you guys reminded me, I just watched a video with Martin Shkreli, and he says, "Don't trade, don't invest, do nothing." Most of you slubs shouldn't do anything. So let me see. Let me play a little bit of this. Let's see what this autistic guy has to say.
I don't know what you do if you're an average person. I'm not sure you should be investing unless you have the time to dedicate to it. I don't know. I wouldn't invest. It's risky.
Order partially filled. Order filled.
Even DCA. I mean, what are you DCAing? I wouldn't invest or trade if I was the average Joe. It's a very, very scary financial world. Is kill or be killed. It's very tricky. Every time you make a trade, you're at a disadvantage. Every time. I don't know that the horizon helps you either. What guarantees do we even have that the S&P will go up? None. None whatsoever. If you want to be bullish on America, I think, you can be. But you're making an implicit bet. Just because the S&P has gone up for decades doesn't mean it will keep going up for decades. There's no reason to believe that that has to be the case. What intrinsically about the S&P 500 means it has to go up? I'm not saying China's it either. I'm not saying real estate's it either. I'm just saying you have to ask tough questions. America's worked really well because we've had generally hands-off regulation, generally low taxes, generally good contract law and things like that. A lot's changed. I mean, look at Elon with Tesla. The guy couldn't even get his own bonus. He was contractually obligated to get. So it was very, people like AOC want to make being a billionaire illegal. We have unprecedented debt levels. We had social unrest for a while. Things look like they're going to be normalizing, which is good. But if you believe in the homeostasis that, okay, things were getting bad, such that people like Elon basically got involved in politics, that we got to fix this before America just doesn't work anymore. And, they were able to sort of get in there and try to fix it. But, people are still trying to stop that,
Order filled.
So we don't know what's going to happen. There are many countries you can look up.
This is why I just tell you guys, look at the chart. I have no biases. I look at a Chinese chart, I don't care what if it's China or not China. I look at a chart. Very basic. I see a chart like this. A great way of doing charting is like I remove this ticker symbol and the company name. Like I just randomly give you this chart and tell you where is this chart telling me it's going to go. That's a great way to test people. Like I could give every kind of chart around here and I could just give it to you plainly. But I don't tell you what company it is. I don't tell you, or I don't tell you, it could just be gold, right? Who knows? I don't even tell you if it's a commodity, it's a stock. It could be a shit coin. Maybe it's crypto. It doesn't matter. All you got to do is you should just analyze this thing and just tell me, is it going to go up or going to go down? What do you think it's going to do? That's it. That's all you have to do. There should be no bias into it. So I don't care. The world could be imploding. It doesn't matter. Does this chart tell me it's going to go up or not? That's all I got to do. And if you mention Chinese stocks, everybody's going to be screaming, yelling, and they already have a preconceived notion, right? If you had that preconceived notion, you missed out on tons of gains this quarter. Like KC, right? Like, what the hell does this thing do? It's Chinese? I'll never touch this thing. Man, you just missed out on another 100% here just doing that. Come on. It was already even going up during the whole time the Chinese stocks were going down between November when Trump got elected into December. Going from $3-4 to $10. Like, none of that matters. I don't give a fuck. And you got this guy here on his screen looking at fart coin.
That had
like, you see this? It says fart coin here.
Partially filled.
Like, what the heck is fart coin? Are you kidding me? So he's so disillusioned. Now he's telling people don't trade and don't invest. Don't do anything. Just roll over and die. Right? There you go. That's the way it goes. So yeah, what I gotta say, man. What I gotta say. It's all about human psychology. That's all that matters. That's all that matters for trading. All that matters for investing. That's really it. So I'm definitely looking for garbage. T-Doc is one of them. mRNA had earnings this morning. Terrible stock. It's still going down. So it had a little bump up when they were talking about like, oh, we're going to do AI or computerized pharmaceuticals, you know. Actually, they have a company that does cells. Let me see if I can find that. So they have a model of the cell. AI model. Cell model project computer. I think Google is involved in this. Damn, I forgot what it's called. Google AI. Is it AI or maybe cell model? Yeah, okay. AI virtual cell. Let's see. This was written in 2024. Okay, let's see. I think CNBC talked about them too. Let's see. AI virtual cell, CNBC. Organs on a chip. Yeah, I don't know if it's this one. Man, Elevate Bio. What the heck? Is this one? Looks like there's a lot of different companies that do the same thing. Dang. Okay, let's see. Yeah, okay. I'll go back and try to find that stuff because I remember I was looking at a bunch of articles talking about this stuff. But in any case, like mRNA, Moderna, you had this pump up, and this was a time when we got took off the air. So I was saying, like, if I was on here, I would have told people to get on this trade, buy it right here on that week of January 21st, right here. You got like a 30% trade, and it looks like it pulled all the way back into the earnings, hit 30, try to come back. So I'm gonna watch this. You know, it's kind of like UPS, terrible stock, but it is at an area where there's support. Definitely, there's some area here. Like this could be some level of support. I don't know. But Derna doesn't have much history though. The only reason it got pumped was because of COVID. So it only got IPO'd just before, right? Like during 2019, essentially. So this thing could still trickle down. and then it would be a buy. But right now, no, I can't tell you to buy this. It's a falling knife. It's a falling knife. Okay. Let's see what other videos to play. I'll keep looking. I'll keep looking for that one. Let's see if I have it somewhere. So while I look for that, let's see what we got here. No, I'm gonna play that some other time. I'm not gonna play that one. Oh, we got a bunch of crypto stuff coming out. So before we get to the crypto stuff, let's see what this guy says about the tariffs.
Trump imposed a 25% tariff on steel and aluminum imports earlier this week. For more on the potential impact on commodities, the energy sector, and the markets, we want to get to our next guest, Jeff Curry. He is Carlyle Chief Strategy Officer of Energy Pathways. And Jeff, it's been a while since we've gotten to talk to you. First of all, how are you doing?
I'm doing well, Becky, and it's good to see you. I'm glad to be back here talking about the commodities. So.
Yeah, there's a lot to talk about. Steel and aluminum prices, we've watched what's happened with the stocks. I guess the commodity is a more interesting thing to kind of take off. Obviously, American companies, their stock prices did benefit from the tariffs that are going to be imposed. What's it been doing to commodity prices overall?
Well, when you look at like aluminum, it's priced it in almost entirely in places like the Midwest premium for LME aluminum. I think the point you make, like Alcoa, it really didn't price it in. So the question is, why did the commodity market price it in and Alcoa didn't? I think it simply goes down to three factors. One, it's going to take 2 to 5 years to bring on new supply. We think the deficits are so large that the persistence of such a large tariff is probably not sustainable. Second thing, I like to point out this out. If you think AI is power intensive, aluminum's a whole different world. It is 6 times more power intensive than AI data centers. So bringing it onshore in an environment in which AI data centers are already expected to consume any excess power, this would be incredibly disruptive to power grid. There's a reason why it was outsourced to begin with. And then I think the third point to keep in mind is, big tech missed earnings last week because the growth in cloud data missed their targets. Why? Because they didn't have access to things like transformers. What are transformers? They're just big chunks of metal. So if you put tariffs, disrupt these supply chains, it just aggravates that situation. I think that's why, Alcoa didn't price it in, but the commodity markets have fully priced it in over the next 2 to 3 quarters.
We've got the inflation numbers that we saw yesterday on the consumer level. Today, we're getting producer prices. How does this play into producer price inflation? Not that we're going to see in today's print, but let's say 3 to 6 months down the road.
It's very significant. I mean, when you look at, the rises in, take that Midwest premium for aluminum, you're up 25%. It priced in those targets perfect, or the tariffs perfectly. You look at COMEX high-grade copper, it's up 10 to 12% right now. These are major inputs into basic production across the supply chain. And I want to point out, in that hot inflation report yesterday, it was things like transportation equipment, which are what? Metal consumers, where you actually saw the inflationary pressures. So, I think this is very significant.
Jeff, we've talked about how hard it is to try to move away from fossil fuels and how long it's going to be. And, it finally made its appearance in the Wall Street Journal, an op-ed piece on Landman, out of Hollywood. There's actually something that shows how essential fossil fuels are to this world that we've built. And the way you do it. But one thing that becomes clear, even why, it's just a TV show, but they do point out the oil industry likes $60 to $80 oil. If it's under 60, things become very dicey for the producers. And it really matters that it like 70, 75, that's perfect. If we drill, baby, drill, like President Trump wants to do, and Doug Burgum, and we keep hearing about it, how that's going to be a panacea and like our golden ticket to everything good in the world. Can't that be self-defeating if we produce too much, or if we overdo it? Won't prices collapse and then we go through a bad spell?
For one, I don't think you can overdo it. I mean, these producers have made it clear regulation is not the constraint on their ability to raise production right now. But I'm going to go back to your point about, low oil prices being bad for the U.S. This is not 1970 United States. This is 2025 United States. It produces more oil than Saudi Arabia and Russia combined. It's 20 million barrels per day of oil production. As you point out, oil prices go down below 65 or 60. U.S. has a problem. If you think about even on the upside, yeah, it may hurt the consumers in places like Chicago and Michigan temporarily, but it will benefit them in the longer term because you get more CapEx, more investment. So when we look at the U.S., it's a benefactor from higher oil prices. So you're spot on. But I think about those fears of prices coming down and creating a due to drill baby drill. U.S. production hit 13 million barrels per day on the eve of COVID. It dropped down to 10. It came back to around 13.2. So between 2019 and today, we're still roughly 13 million barrels per day on liquid oil production. You get to the 20 by adding in NGLs and other types of liquids, but black crude oil, it's roughly 13. I think you're going to really stress the system to get it above 13.4, 13.5. So when we think about the ability to drill, baby drill, even the administration has toned down the barrels of production and called them barrels of oil equivalency to be able to address it as gas as opposed to oil.
I don't know what all that means then. So it's kind of a pipe dream then that we can't produce more.
Yeah, I think it'll be really difficult to add, that their target is 3 million barrels per day. And that's the reason why they quit calling it 3 million barrels per day and called it 3 million barrels of oil equivalency per day.
So what happens with Canada if they decide to put tariffs on the energy that they are sending us?
Well, I think when you look at the ability for them to redirect oil out the West Coast through Vancouver into places like China, you're already seeing every effort to move those barrels elsewhere in the world, which is creating shortages of products in places like the mid-continent. You look at product markets around the world, they're at very, very tight levels at this point right now. So we're starting to see barrels being redirected. Not only do you have the tariff situation in the U.S., but you also have, Russian sanctions biting, Iranian sanctions biting. Overall inventories are the lowest levels they've been since, going back decades. So market's tight. You can see it in the front of the forward curve, which suggests, the risks are still skewed to the upside right now. The question you're probably asking, why doesn't the price price it in right now?
Why hasn't gone in? Right.
Investors have no interest in coming to this space. And when we look at, the amount of leverage in the market, given where interest rates are, the cost of capital, people shun these markets, all of these markets, whether if it's aluminum, copper. The old economy is still very much out of favor right now. And you have to get expected returns high enough relative to, say, like big tech before you're going to see capital move in here. Another way to say it is, in the 2000s, when we got bullish on oil, the market would price it in because it saw the upside. Today, it's not going to price it in until you drive over that pothole.
Oh, well, that's pretty bearish, pretty pessimistic, I suppose. But I think it is coming. One side of the boat, too many people, too much money is in tech right now. I think it's going to flip over to the other side eventually. So let's see. Aluminum, copper. Yeah, all this mining stuff, right? We got energy with oil, natural gas. So I think there will be a shift coming soon. So now let me show you this. So I figured it out. Found out what it was called. It's called AlphaFold. AlphaFold is an AI program that predicts protein structures from amino acid sequences, which can help with drug discovery. This technology is expected to speed up and lower the cost of drug development. How AlphaFold works. AlphaFold predicts how proteins fold into 3D shapes. It can predict how new drugs will bind to proteins. It can help design more effective and selective drugs. Okay, so this thing was developed. I think they got a Nobel Prize for this. They got published in Nature. I think Google's got their hands in this thing. So yeah, so keep this in mind. So I don't know if RxRx, that company does this type of work, but yeah, definitely something to look into. I think there's a lot of interesting new tech being developed. So whatever's in the ARKG ETF, I'm sure Kathy Wood probably has her hands in it, unless it's not public yet, right? So that's it. So let's see. Now I'm going to play some crypto videos for you. Now again to crypto. Let's see what crypto stuff we got going. I think we have a new CFTC nominee. That's one. Okay, and then we got a Tether one. Okay, we got Tether. Okay, we got that. Not enough power. Oh, okay, we got one about that. All right. Okay, let's see what this is about.
Today, cryptocurrencies bounce back from a brief sell-off after inflation unexpectedly rises in January. Trump taps a crypto policy expert at VC firm Andreessen Horowitz to lead the CFTC. And as the U.S. regulatory environment changes rapidly, Nathan Allman of Ondo Finance shares how institutions are thinking about crypto this year. Welcome to CNBC's Crypto World. I'm Katie Tarasov. Crypto markets bouncing back after hotter than expected inflation data in January initially pushed digital currencies lower. As of noon Eastern, Bitcoin climbed more than 0.5%. Ether was mostly flat, and Dogecoin inched higher by 0.6%. Okay, let's talk about the top stories. Trump family-backed crypto project World Liberty Financial is launching what it calls a macro strategy, or a strategic token reserve. The company shared the news on X yesterday, saying the reserve is designed to, quote, bolster leading projects like Bitcoin, Ethereum, and other cryptocurrencies. The goal of the macro strategy is to diversify World Liberty's holdings across various tokenized assets and mitigate volatility. According to a document issued by World Liberty, the Trump family could get 75% of the project's net revenue, while assuming no liability. Next, President Trump picked former CFTC Commissioner Brian Quintenz to lead that agency. Quintenz shared the news on X this morning, saying the agency is in a good position to ensure the U.S. leads in blockchain tech and innovation. This pick marks yet another crypto-friendly pick by the president, as Quintenz currently heads policy for A16Z's crypto arm. Former chair Rostin Benham stepped down from the role last month on Inauguration Day, and the regulator is being led by Caroline Pham in the interim. Finally, crypto custodian Bitcoin is reportedly weighing an IPO. That's according to Bloomberg, which reported yesterday that deliberations are ongoing and no final decisions have been made. This comes as the industry grows optimistic about its future in the U.S. under the Trump administration. BitGo's CEO, Mike Belshie, contributed $100,000 to Trump's 2024 campaign and reportedly held a fundraiser in Silicon Valley for then-candidate Trump. Bloomberg also reported last week that crypto exchange Gemini is considering an IPO, but hasn't made a decision. Its founders, the Winklevoss twins, were major backers of President Trump, too. Circle is another major crypto firm looking to IPO on a U.S. exchange. After a SPAC merger was scrapped, the company submitted a draft S-1 form in January of 2024, but little has been said since. Last October, stablecoin issuer Circle's Jeremy Allaire told Crypto World that going public is, quote, critical to the company's future. He also said becoming a publicly traded company would increase trust and transparency. Okay, let's talk about institutional crypto sentiment for our main story. Ondo Finance held a summit in New York City last week, hearing from business leaders on the future of on-chain finance. Crypto World's Tanea McKeel.
Three sources tell CNBC that GameStop is considering investing in Bitcoin and other cryptocurrencies. They say the company is still in the process of figuring out if it makes sense for the business and could still decide not to follow through with the investments. Last weekend, CEO Ryan Cohen posted a photo on X with Michael Saylor, co-founder of MicroStrategy, one of the biggest holders of Bitcoin. Two of the sources tell CNBC that Saylor, though, is not involved in GameStop's discussion about crypto investments at this time. GameStop soared as much as 20% in extended trading following that report. It's not at that point now, but still up almost 10%.
Find it all sort of tiresome.
what is a treasury investment or something? What's it got? I don't know how you.
No, well, the whole one of the bull theses, as you know, for Bitcoin is that corporate America is going to start putting it on the balance sheet. I don't know if that's exactly what they're talking
that's what I
about
mean,
here.
like MicroStrategy or something.
People want Microsoft to do it. You know, all of the big.
I've seen that, but I thought in the strategy of what is GameStop now? It's got to. We've always wondered how they transition from bricks and mortar to everything that you get online for gaming now.
Yeah, I'm not sure that saying we're going to hold Bitcoin is, you know, you want to hold, you can just go hold Bitcoin. And I know that strategy, you know, acolytes think that they've, reinvented the wheel here on a more profitable way to do so. But the idea that you're going to get bailed out as a company by adopting that, not if it, what now more broadly, whether companies start putting some of their cash in Bitcoin, fine, that's a little different story.
And countries.
Right, countries, yeah. We're also watching shares of Coinbase today, especially after Robinhood's report earlier this week. Now, last night, Coinbase's fourth quarter earnings and revenue shattered expectations. They cited the election of the pro-crypto president in Congress, the expectation of more regulatory, they're talking about maybe even combining CFTC and SEC. That's, again, one of these rumors in the Bitcoin community. Both of those things last night led to a rise in spot crypto trading activity the past few months. Coinbase was up 8% yesterday after Robinhood's report, which detailed a big jump in crypto trading. So it already kind of priced in some of these results, and then it's selling off about 0.5%.
Culturally, I don't know CFTC and SEC. I don't know how that.
But there is this gap where, like, look at the meme coins, right? Are they a security or are they not?
I know that's tough.
Do you need one big regulator?
In the old days, to get a CTA, and I got one, I think it was $50. And if you had $50, you could be a commodity trading advisor. Whereas the SEC, I mean, the Series
much different, 7 and 63, and
had to do a lot of stuff. And then you remember some of the guys that ran the CFTC, they almost looked like they were in the commodities. I think it's totally changed. Totally changed. I know.
Crypto has pointed out that we
but
need
it's just
some way of
culturally,
defining.
it used to be anything.
What do you think the Trump meme coin is? Is it a commodity?
I don't. What's the Sorkin coin?
Is it a security? Right.
I don't know.
Yeah.
I own it, but no, I'm kidding. I don't. I'm short. No, I don't. I have no position. No position.
Oh, what is a commodity? Yeah, what is a commodity? I thought it's something you can consume, right? No. Can I eat a Bitcoin? I can't eat one. I guess that's not a commodity. Well, I mean, a gold's commodity. Can I eat pieces of gold? Yeah, well, maybe. If you get gold flakes in your food, yeah, that's a commodity. Man, I remember an old story back in the day. Let me see if I can find it. Commodity traders, pits. Cowman. So they used to trade cattle, in the Chicago pits, like literal cattle. Well, I don't think they bring the cat. Well, yeah, they actually might bring the cattle there. Let me see. So there was a guy called the Cow Guy. Okay, I found it. Let me see. Let's see. Let's read it for you guys. Okay, here we are. After this, I just got 2 more videos, and then we'll be done for the day. Okay, let's see. The Cow Guy. Here's the true story behind the CBOT trader's famous cow print jacket. So there was a guy who went to the pits in Chicago to trade his cattle. This story is moving. So this was written in December 6, 2011, a long time. I don't think anybody trades futures and commodities in the pits anymore. If you're an avid viewer of financial television, then you probably noticed the trader at the Chicago Board of Trade who wears the cow print jacket. That means you've probably wondered why he donned such an eccentric jacket. It turns out the reason commodities trader Scott Shaladay, I guess, sports the famous cow print jacket while in the pits is ingrained in a bit of family history. It was his father's. I decided to carry on the tradition of wearing his jacket, Shaladay told Business Insider. He wore a cow jacket and I took up the reins. Back in the early 1960s, Shaladay's father, who was also a trader, bought an 800-acre dairy farm in northwestern Illinois. His father chose to wear the cow print jacket on the trading floor because he wanted to advertise the fact that there was a user, a producer, and a middleman. Growing up, Shaladay spent a great deal of time with his father and siblings on the family farm. During this time, he learned to bale hay and even witnessed cows give birth. His father has retired from trading and has been diagnosed with Alzheimer's, but Shaladay still carries on the legacy of the cow print jacket and the message his father wanted to get across. We have a viewership in the open outcry, and I wanted to advertise this and remind these guys when they were trading that it was not just some sort of casino in Vegas. Shaladay, a frequent contributor to financial news networks CNBC, Bloomberg TV, and Fox Business, admits that oftentimes when he goes on air for hits, he'll get poked fun at for his attire. I get a lot of ripping on the national networks, and there are sound effects whenever I get on. But one thing is for sure is he gets attention, although he doesn't think it necessarily helps him in the trading pits, which can get extremely loud and rowdy. I have the ability to yell and scream, the former University of Colorado Boulder football player said, adding that if you're loud and have a good jacket, that definitely helps. It won't hurt you at all. I can't give the jacket all the credit, but it definitely enhances it. Shaladay, 46, admits the jacket he wears today isn't the original. He's gone through about 5 different ones at this point. And while he is the only one at the CBOT who wears it, there's at least one other famous person who has one. New Jersey Governor Chris Christie. Shaladay gave him a version of the coat last month. Sadly, it's unclear if, when Shaladay retires, someone will pick up the torch and carry on the legacy of the cow print jacket. I don't have anyone else in my family that could wear it, he said. It could stop with me, or we could have a representative at the firm when I retire. So, yeah, that's a little history there. I don't think anybody trades commodities in the pits anymore. It's all digital, all through computers. So there's nobody yelling like in trading places, So if you want to see the original days, yeah, you can go watch that movie. That gives you the little bit of history there. Okay, 2 more videos. All right. Let's see what this one's about. We got the Tether one. Okay. All right.
Paolo, thank you so much for joining me on Crypto World today. Let's start with this report from JP Morgan, saying Tether could face challenges from the proposed U.S. stablecoin legislation, namely that's the Senate's Stable Act and the House's Genius Act. The analyst suggesting Tether reserves are only partly compliant under each proposed bill, and that you'd have to replace non-compliant assets like precious metals, Bitcoin, corporate paper with compliant assets like T-bills. Your response?
Yes, thank you, first of all, for having me. First of all, I think that the JP Morgan analysis is missing the fact that Tether has over $20 billion in additional assets that could be repurposed and in order to cover the potential requirements of having the majority or if not the totality of the reserves in T-bills. Tether has already more than $115 billion in US Treasuries. We are not new to change our portfolio and make it more conservative, increasing the amount of T-bills. In the past, we were criticized for having the portfolio in commercial papers. We publicly said we would move the portfolio in towards US Treasuries, which we did. Now it's again, $115 billion and counting. Our interest is anyway going towards the totality in the US Treasuries anyway.
We saw that Tether had been delisted from several European crypto exchanges when the MiCA regulation came into effect. But your market share in the US is more significant, I think. Do you expect a similar challenge if the US passes stablecoin legislation in the coming months?
Well, look, when it comes to MiCA, we have been very, very open to our concerns regarding the MiCA license. And our main concern was exactly the opposite one compared to the proposed laws in the US. So the MiCA license actually requires 60% of the reserves of a big stable coins like USDT to be in uninsured cash deposits left in European banks. We were actually advocating in Europe to have to allow us to hold the majority in country bonds, in government bonds across the different countries of the Union. That is very much in line with different of the proposal within the US that would require anyway 100% in T-bills or other cash equivalents. So just to say, I think would be delusional from our competitors thinking that we are going to leave the US banning us. So we are going to comply with the regulations. We are actually engaging with regulators, and in order to provide them the context and the proper education coming from the company Tether that created in the first place the stablecoin industry in 2014. So we know how exactly stablecoins work, how they should work. We were the stablecoin that resisted to the wrath of God when we were attacked in 2022. Differently from our major competitor in 2023, they almost died for having too much risk exposure to Silicon Valley Bank. So I think we have a lot of information and insights to provide to the lawmakers in the US, and we are going to do exactly that.
Yeah, a lot to show for yourselves, and obviously a favorite among crypto natives that have been using stablecoins for a while. On the flip side, it has had a controversial history in the US, and we've talked about this already, the concerns about the reserves, and not to mention the DOJ investigations. Now we have a very pro-crypto government here in the US, not to mention Howard Lutnick, the CEO of your bank, Cantor Fitzgerald, in the Trump cabinet. So I know that you are engaging in conversations. Can we expect to see you expand in the US this year?
So we are exploring the different opportunities that we have in the US. First of all, our most important achievement will be being part of the discussion around the potential legislation of the stablecoin bill, because it could impact also foreign issued stablecoins like USDT in this moment. But also we are open to, and we are seeing in a very positive light, the openness of the new administration towards crypto. I think is very welcomed by the entire industry, not just ourselves. And so that opens to Tether also further possibilities that we are going to explore in the next few months while the regulatory framework in the US will become more clear.
What is sort of your biggest priority in these conversations about the stablecoin legislation, or what would be your big priority? What is, to you, the most important thing that the legislation get correct?
So I think when we hear talking about stablecoins now, the most important misunderstanding is the importance of stablecoins, not for the US payment system, because in the US there are plenty of ways for people to pay US dollars, but the importance of USDT and US dollar stablecoins outside of the US. There are 3 billion people in the world that don't have bank accounts, not because they are bad people, just because they are too poor of any interest of banks, right? They don't generate enough money on a yearly basis to generate enough commissions for the banks to keep them as customers. So they need USDT. We have 400 million people outside the US that are using USDT because they don't have any alternative. And even more so, I think the big mistake of stablecoins that are our competitors that are focusing too much within the US is the fact that they are trying basically to sell the US debt to US people, which I think is not what the US administration should seek. And actually the US administration should focus on dollar stablecoins that are actually exporting the US debt and making more resilient, more decentralized in terms of ownership outside the US, helping to find new buyers for the US debt. and make it really more decentralized and resilient to potential attacks from competitor countries. That is exactly what USDT have been doing over the last many years, and this fact is not very well understood because of some gaslighting that our competitors tend to do within the US administration, at least the past one.
Yeah, it'll be interesting to watch this year. As you know, stablecoins, including Tether, are typically associated with trading, and we really did see a big rally after the election and earlier this year. A lot of analysts and Wall Street types that I spoke to said that, you know, with the meme coin craze and with the launch of Trump coin, it effectively greenlit a crypto craze. So it will be interesting to see if that narrative can shift this year within education. To finish, I do want to talk about your move to El Salvador. You just moved your headquarters there. How come, and how do you expect that move to benefit the company?
Well, first of all, El Salvador is a great country that have been focusing on digital assets for the last 2-3 years. They have a proper regulatory regime for both digital assets and in particular for stablecoins. So as a company that needs clear regulations, we had to and we needed to have a license in order to operate, and El Salvador had a very comprehensive, strong one that we could apply to. Also, the country is beautiful, and again, going back to my point before, USDT is the instrument at the best alive for the United States for dollar hegemony, and you work in this sector outside the US. You focus on Argentina, you focus on Brazil, on El Salvador, or on Turkey, on Vietnam, and so many other countries. So the work is outside the US, is in the street, with boots on the ground. That's what we do. What we do at Tether is what is differentiating us from anyone else. That's why El Salvador is the perfect place as a headquarter, because it's basically for us is the door for Central South America. That is one of the most prominent countries for dollar stable coins.
Well, everybody's going to El Salvador, huh? All right, I see. So we got prisons in El Salvador, and we got crypto in El Salvador. Fascinating. Fascinating. All right, last video here. I think Tropes want to talk about Iran. So let's see what the Iran CEO has to say. All right, so he does the crypto and the AI. So let's see, and then I'll show a chart after we're done with this and see how this company might do if Bitcoin's going up. Let's see.
He's the co-founder and co-CEO. And Dan, most people think renewables aren't a great way to power data centers because you got to have that perfect always-on energy. Welcome.
Thanks for having me, Kelly. Oh, look, I think that's a bit of a misconception. The reality with data centers is they are connected to utility grids that underwrite the intermittency from renewables. So every network is a melting pot of wind, solar, batteries, gas, etc. We're connected into the West Texas ERCOT grid, 80% renewables, but continuous 24/7 power.
Got it. So you're just connecting into a grid that is 80% renewables. Is that right?
That's spot on, but it gets better because we've got an algorithm that automatically puts our computers to sleep when power prices go up. So when the wind stops blowing, the sun stops shining, there's a weather event, network outage, we're able to automatically put our computers to sleep and give that power back to the market, a bit like a demand-side battery.
So tell me why, this is a prime opportunity for the explosion we're seeing in AI and obviously the continued demand for mining Bitcoin.
Well, it's all about power. It's the power story. And you're seeing hyperscale CapEx forecasts for AI growing 65, 70% year on year, over $300 billion in 2025. And there just isn't enough power to fuel this appetite for AI demands, let alone Bitcoin as well. If you assume just half of that $300 billion CapEx is going into NVIDIA GPUs, that's over 10 gigawatts of additional demand. Morgan Stanley are forecasting a shortfall of 36 gigawatts of power in the next 3 years. And yes, we've secured 2.3 gigawatts of grid-connected power, but it's still not enough.
Can you explain, Dan, in plain English or plain Australian, as it may be, to the audience, because I've tried my best to do this, which is how power is different, right? Electricity is different in different places, and this idea, as cool and as revolutionary as it might be, probably would not work in Minnesota.
Yeah, look, it's about large quantities of electricity, but it's not just enough to get the electricity. You've got to step it down to a usable level. And all of that takes time and many years of development, permits, planning, network study. If we take that 10 gigawatt number, that's equivalent to 10 million washing machines. You can't go and plug washing machines into a high voltage transmission line. There's a very lengthy process you have to go through in order to step down that power to a usable voltage, let alone procure all of the components, chillers, generators, steel, concrete, low voltage transformers. So there's a lot that needs to happen over a multi-year time horizon to actually deliver this power, deliver this data center capacity. And this is at the heart of the issue. It's the dislocation between the real world and the digital world. We've got these digital world exponential trends, whether it's Bitcoin going from zero to a $2 trillion market cap over the last 15 years, whether it's AI going from no one talking about it 18 months ago to being the latest, biggest thing today.
Right.
These digital trends are unconstrained by the real world, but it takes time to deliver real world capacity to service these trends.
Dan, what is going on in Abilene, Texas? I have not been down there. So you guys are about 40 miles from Abilene, 30 miles from Sweetwater. Abilene, of course, is the site of this like 10 cluster Stargate massive supercomputer that they're building out. You're just a little bit away from. Why has this become the epicenter, as it seems like it is, of these mega data and energy plants? What's going on?
It's the power. It's where the power is. In Minnesota, you can't get gigawatts of power for data centers. In Texas, it's an open network. It's an extremely large network, and the availability of power is there. So this is the story. Data centers are migrating out of metropolitan areas, away from customers to the source of low-cost renewable energy, and that's West Texas.
Low-cost, the source of low-cost
lots of wind, lots of sun.
Energy is West Texas.
It's Boone Pickens. It's lots of wind, lots of sun.
Never would have thought that 50 years ago, and here we are. Dan, thanks so much. Appreciate you joining us today.
All right, so we got something interesting to talk about in West Texas eventually. Interesting. Lots of interesting things. So this is the chart of IREN. Okay, it looks like it IPO'd around here, 2021. I paid attention to the stock. It just dropped like a rock all the way to 2023, right here at $1. Now it's at 15 here. It's been dancing with Bitcoin. Okay, essentially, but it also doesn't really follow too much of Bitcoin too, because like a lot of these Bitcoin mining type stocks, this one really tries to get away from it because it does a lot of AI, supposedly AI stuff, and I think a lot of the mining stocks also will do the same thing. Wolf, I think, is another one that could be similar to that. So WULF. So pay attention to this one as well. See what happens here. But yeah, IREN, IREN. Okay, to pay attention. You can pay attention to this one. I'm looking at the $15 mark. See how it goes from there. So yeah, that's about it, guys. So good hunting to you. Plenty of interesting things this year. A lot of trading to do. If you're looking for investing, then Deere is the stock I talked about this week. It had earnings. It's still above that 397 level. Very good. A lot of volume. It went down on Thursday, but then picked up in late of the end of the day to the close. And then today it's up 3%. Very good. So it supported that level. So even though we had initial bad reaction on earnings, still good. So if you look at the weekly chart, high volume, still up above. Still at 480. I think this thing has clearly broken out of the range of 291 to 400 that was set way back in 2021. It's ready to go to the next state here. Another one is WMB Williams Company, natural gas, still here, fighting at that resistance area up at this level. I don't think it's been here since 2014. So yeah, this area here at $57, very important. So it just had earnings this week as well. So it's trying to get back to that level. So WMB. So yes, there are future long-term stocks that I would say could be Deere and WMB. Looks like this could be the year for them to continue on. So it's already broken out of this level. 2022 to 2023 got above 40 up here. Very good. Excellent. Excellent. Yeah. So if I pull this line back, probably you could say like this, it's been under here, but now we've retraced back. Perfect. So yeah, this could also be a potential WMB Williams Company. All right. So don't say I didn't give you anything that wasn't long term. All right. So I already gave you Palantir last year and Axon. Right. What else can I give you? I'm gonna look for the next great. Hey, what's up, Garian? Go be listening. Yeah. I'm wrapping up here with Valentine's Day. I wasn't gonna do anything, but there was a lot of activity apparently in the day trading. Anyhow, I think HB was going crazy, and so a lot of the stocks I mentioned yesterday, they popped today. We'll have to go into next week, so we got to get ready for that. There's gonna be a lot of activity. Oh man, it's never ending. It's never ending. Yeah. So yeah, man, Jesus. It's never a dull moment in the markets. It's never a dull moment. It's been quite exciting since January 13th. So yeah, watch the last video from yesterday and then you'll understand what I'm doing today, and then we'll go on for there because there's a lot of day trading going on. That's for sure. All right, guys. I'll see what I can figure out. I think I have to figure out this. I spent most of my time we've over 70 episodes of this show, and I'm doing the chart stuff. I'm trying to give you a lot of the setup ideas, right? And I've kind of given a little bit of the trigger, not too much though. Like Joe Rabel and all that, he has the trigger. I'm gonna see if I can do some. Jake Bernstein? Yeah, he has I'll have to go through some of those videos too. So what I'm gonna do is I'm gonna have to catalog a lot of old videos and see if I can clip them out and stuff, whatever. So there's gonna be a lot of work. And also I have a lot of clippable moments from the current month because you can see like, hey, whatever I told you guys happened, right? Pretty much happened as I said it was gonna happen. So John wants me to be like showing people like, hey, I said this on this date. Was it true? Did it happen? Yes, it happened. This and that. So then I have enough evidence now over this past month to go back on. All right, guys. I'll see ya. Happy Valentine's Day. Get Cupid to give you an arrow, you know. And yeah, don't get date raped or something like that. Oh, my bad.
Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go.